Warren Buffett's company, Berkshire Hathaway, ticker symbol BRK, is a company many look to for investment ideas and to gain some insight as to what companies Buffett himself sees value in. Well, recently his company actually reduced their position in a particular stock that they've been holding. And before we reveal which company this was, I want you guys to take a guess in the comment section down below what company you think it was. Was it Apple? Was it Coca-Cola? Or was it Wells Fargo? And guys, I'd truly appreciate it if you could lightly tap that like button down below and help us get to 300 likes on this video. Alright, so enough of the games, let's get down to business here. The answer to that multiple choice question was Wells Fargo. And we can see here in a recent filing in their Q4 earnings, it was revealed that the largest owner of the stock, Berkshire, sold off around $1.6 billion worth of their shares. I got this tip from a Twitter user, Inquisitive Investor. Found this to be a pretty great account to follow on Twitter, so check him out if you have a chance. Now, even after the sale, Berkshire still owns around $19 billion of the company, so it isn't too significant of a sell. However, it's not the value of the sale that caught my attention, it's the fact that they are selling right now that caught my attention. Buffett's philosophy has long been to just buy and hold, buy incredible businesses and hold them pretty much forever, unless something fundamentally changes in that business, which causes you to question that investment and maybe even sell out of that stock. So the fact that they are selling right now, even though it is a small position that they sold off, it makes you wonder if they see something that we don't, or if they maybe lost some faith in the business here after the recent scandals. Well, I don't really know the answer to that. Only Buffett and the guys over at Berkshire knows the answer to that. However, what we will do in this video is take a deep dive look here at Wells Fargo. They recently reported the Q4 earnings, which summed up their 2019 year as a whole. So we're actually going to take a look here and see if, maybe this is a potential value trap, or maybe this stock is actually providing us some good value here and maybe worth considering a position in. So first we see here that their net income, which was the lowest in the last year by far, came in around $2.9 billion. Now this did include a $1.5 billion charge that they paid out from their previous scandal, and seeing how this is a short-term issue, if we incorporate this into their earnings, it would have actually yielded them around $4.4 billion in net income for the quarter. This would still have been the weakest quarter in the last year, but a much better figure than the $2.9 billion that was reported. Now this aside, there was actually some positive metrics here reported on a year-over-year basis for Wells Fargo. Loans were up, deposits were up, and the number of shares outstanding was reduced significantly by 10%. Now these are all positive signs of a healthy company, especially when it comes to banks, because they make the core of their money from loans and deposits, and we see both of these metrics doing nicely here in Wells Fargo. And just for comparison's sake, I actually did some research on the other major banks here in the US, and what I did was compare their deposits year over year compared to Wells Fargo. We can see that Wells Fargo reported around a 4% year over year growth in deposits. Bank of America had around 3.71%, Citi had a whopping 7.98%, and JP Morgan Chase had a 5.87% increase year over year. So yes, although Wells Fargo wasn't the best performer, it wasn't the worst performer either, despite all the negativity around the brand. And to me, this really shows a lot of strength, because when I look at these numbers, I know that Wells Fargo is not at their peak right now because of their brand image, but they're still growing here and they're not the worst performer when it comes to the deposits year over year. All these other banks have had pretty much everything going in their favor recently, and these are the numbers that they're able to post. But Wells Fargo has a lot of headwinds, or had a lot of headwinds in the last few years. So to see some nice growth here from this company, despite them not being at their peak once again, is a positive sign. And even when it comes to revenue, this is one of the biggest banks in America. They're behind JP Morgan Chase, yes, but they're almost in line with Bank of America and quite comfortably ahead of Citibank. Again, this is despite the negativity around the brand in recent years. Now, when it comes to investing in financial related stocks, investors want to definitely see some sort of dividend, and ideally a growing dividend. This is because banks aren't really expected to grow enormously year over year, so investors rely on that dividend to have consistent growth, consistent income into their portfolios every single year. Wells Fargo pays out a handsome 4.35% dividend currently, with a comfortable 49% payout ratio. This combination is actually very attractive to investors because it actually shows that Wells Fargo has a lot more room to grow their dividend if required. Now remember, as their earnings start to stabilize after these lawsuits and charges are behind them, their payout ratio is expected to drop. And yes, while they did cut their dividend during the last recession, most other financial companies did as well because it was an extremely tough time for them. Wells Fargo, though, has come out stronger and in just the last year gave investors a nice 17% raise on their dividend, which was a nice surprise. Comparing Wells Fargo to its peers here for dividends, they are by far the highest yielder, but they also have the highest payout ratio. But again, with earnings stabilizing over the next year or two, this should drop to a level more in line with the other companies, but they will still maintain a good percent yield. Citi may also be an interesting one to look at here when we look at this data because they've been growing that dividend aggressively recently and may catch up to Wells Fargo's yield in the next few years. Nonetheless, what we're seeing right now with Wells Fargo with its yield is near its 10-year high, implying that there is value in this company at current stock price levels. What I also like to look at is the PE, the future PE, and the historical PE, and kind of use that in comparison with the dividend yield history as well to figure out if a stock that I'm interested in is actually providing some good value here. At current prices, Wells Fargo stock appears to be fairly valued or slightly undervalued if you're looking 2 years out. This is of course based on analyst estimates, and if Wells Fargo is able to beat these estimates, it'll provide even more value in the stock. At a 2-year forward PE of around 10 with an average PE of 11, I'm personally fine buying into Wells Fargo at these levels, as that 4% dividend yield cushion is nice to have as well. Now briefly looking at the monthly chart here for Wells Fargo, I noticed that it's in a consolidation phase currently and it hasn't moved much since around 2014. This is actually very similar to what we saw back in 2006-2013 in the stock before it made a nice run up from $20 range to the $50 range. I suspect that soon enough, once they get their scandal behind them, the stock will act similarly to the previous consolidation period, and we should see a nice run up in Wells Fargo stock, and it should end up at a good amount above current price levels. And really the man to help them out and help them achieve this goal is their new CEO, Charles Scharf, who started back in October. Charles was recently a CEO of Bank of New York Mellon, but before that he was CEO of Visa, and we all know how Visa has done in recent years, and a lot of it was because of the technology aspect that Charles brought to the company. So there's a lot of optimism here that he can do the same thing for Wells Fargo and turn this company back into a respected brand name and respected stock for investors. What I found the most interesting about Charles is that he actually worked under Jamie Dimon, who is the CEO of JP Morgan Chase, and he did this for 25 years. And based on this, I assume that he would have learned a lot from him over the years, and there is potential that he could bring Wells Fargo to the same level that JP Morgan is at today. Quite honestly, when I look at the financial space, JP Morgan Chase is probably my favorite financial stock because they've built such an incredible brand, the business is just run so well, and they embrace technology before their competitors do. The problem, however, is the stock is just too rich for my taste. The valuation is a bit too high for me, which is why I don't currently own JP Morgan Chase stock. But really here with Charles as the new CEO of Wells Fargo, he could potentially make Wells Fargo, just like JP Morgan Chase, could make it a very strong tech-based financial company. And if that does happen, we'll definitely see higher prices in Wells Fargo in the future. And really only time will tell how that plays out in the future, but that's exactly why the stock is looking so attractive today. There's still uncertainty from investors if Wells Fargo can actually become the largest bank in America once again. And if that's possible, is Charles the right man for the job? I personally think so. I think that he actually could transform this company into its next phase, into kind of a new generation financial tech sort of company. But again, guys, only time will tell if that does play out. Meanwhile, while we're at these current prices under $50 per share in Wells Fargo stock, I'm interested, and I really want to hear if you are interested in buying this stock. Are you a customer of their services? Are you an owner of their stock? Why or why not? I'd love to hear your insights in the comments section down below. Either way, guys, thank you so much for watching. Hope you learned something from this video, and if you found value, don't forget to drop that like down below. But either way, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.